I've sold my ITC holding and there is a reason why I've sold it and I'm going to explain it on this video as to why did I sell it. And after I sold my holding, ITC has started to come down. Hi everyone, let us start today's video by analyzing three specific graphics. So graphic 1 shows the return of the stock market for the last 90 years. And what you would notice is that if you would have invested 1 rupee or $1 in the stock market in 1930, right now your return would be somewhere around 17,715 rupees or dollars. So very excited, excellent graphic there. But if you look closely, what you will observe is this column. What this column shows is that if you would have missed just one best performing day in the stock market every year, your return would fall to just 28% from 17,715%. So it looks like that timing the market might not be the right strategy. Let's move on. Let's look at graphic number 2. And here this graphic comes from the year 2022 and it talks about US millionaires and what they are doing. So basically they are very worried about the inflation and they are rejigging their portfolio. So they are selling equities, they are moving to bonds, they are moving to some other asset classes, whatnot. And they are very, very panicked, so to say. And they are trying to save in cash. Now you might say that, you know what, Akshat, you keep on talking about that cash is trash and you keep on quoting Ray Dalio. So okay, contrarian viewpoint, we are going to analyze it. Now comes the third graphic, which is about Mr. Warren Buffett's investing strategy. So as you can see that till the end of 2021, Mr. Warren Buffett was sitting on massive pile of cash, approximately $150 billion of cash. And he has recently started purchasing a lot of stocks. Now, if you aggregate all these three pictures together, what information are you able to glean? So the word of the day today is glean. Let me know what does that mean. So what are you able to notice is that number one, timing the market might not be the right move as the historic returns tell us. Second key point, a lot of US millionaires are trying to time the market. And number three, we have a balanced investor, Mr. Warren Buffett, who sat on a lot of cash pile. Initially, his strategies did not work because he did not make much return in 2020, but now he has changed his strategy and he is trying to invest more and more. So all these viewpoints look very confusing to a very simple question that right now, should you be sitting on cash? Cash means that having your money in your bank account, fixed deposits, etc. Or should you be investing in the stock market? So this is the simple question that we are going to analyze and I'm going to share my strategy also. And also a very interesting snippet here that I sold my entire holding of ITC a few days back. I have been a prominent supporter of ITC stock. Now, please do not create ruckus that Akshat, why did you sell your ITC holding this, that? I've sold my ITC holding and there is a reason why I've sold it and I'm going to explain it on this video as to why did I sell it. And after I sold my holding, ITC has started to come down now. So let us get the discussion started. Also a very quick shout out to our sponsors for today, which is TaxBuddy. It is an excellent tax filing platform. Last year, several of my subscribers benefited from the discount that TaxBuddy was offering. It's an end-to-end solution for helping you optimize your tax returns. And my subscribers got like 35% off on TaxBuddy services. So you can use the link in the description box to avail that special discount and the TaxBuddy team can help you with notice resolution, optimizing your tax returns and a bunch of other different things that can allow you to save a lot of cash, which you can then invest in the stock market. So let us get the discussion started and we will discuss three simple points. Point number one is that should you be saving right now in cash or not? The answer is no, and the answer is yes. Why? Because this is a complex question. Majority of the investment decisions are complex. It is really funny that a lot of viewers are now blaming me for JP Power's fall. There was a time when I had made the video on JP Power and the stock gave roughly 130-140% return. People did not book the profit and now the stocks comes down and Akshat, you are at fault. So have I taken like guarantee that a stock will forever keep on going up? There is something called as controlling your greed and timing the market also. Similarly, a lot of people after watching this video will say that, you know, Akshat, you are like a dogla insan. You have changed your tune on ITC. You sold your own ITC stock. Okay, I sold the ITC stock because I made 45% profit on it in a falling market. So anyways, whatever money you are investing in the stock market, please be responsible for it and take accountability of your investments. That's a simple viewpoint. View this material as educational material. So, okay, coming back to the topic that should you be saving in cash right now? The answer is yes and no. So let me explain both the sides of the equation. The answer is no, that you should not be saving in cash simply because of the viewpoint that the inflation is high. It is hitting very high numbers in the US, even in India and other parts of the world. Inflation is very, very high and it is going to remain high. What it simply means is that if you are keeping 100 rupees in your bank account, even in a fixed deposit, and the FD rates right now seem to be between 5 to 6%, the inflation is 8%. So in real terms, you are losing money. So your 100 rupees next year becomes 97, 98 rupees, even if you are investing in a fixed deposit, and that is a fact. So that is the reason why you should not be keeping your money in cash. Now comes the contrarian viewpoint that if you are saving in cash and if you have a chunk of cash lying around right now, then you can go and time the market, and when the market is almost at the bottom, you can invest money and make crazy returns. Such type of scenario plays out in almost every single recession, and if you are able to time the market here, you will become super rich. So these are the two viewpoints, and of course your question would be that Akshat, this is like very confusing. What do you mean that save money also and then don't save money also? Can you give more clarity? Okay, so basically what do I mean? That if you are getting 100 rupees, then please don't keep it in cash, invest in some kind of asset. These type of assets should be wealth preserving. Now, I will not go into the definition of what wealth preserving assets are, because then people say that, you are trying to prove certain agenda. I have already made enough videos. You can go and check it out and you can figure out whichever assets you consider to be wealth preserving. And finally, it should be that you should be able to liquidate those assets very, very easily. Liquidation simply means that, let's say, if you have kept 100 rupees in your fixed deposit, it is very easy to break that FD. So that means liquidation of FD. But if hypothetically speaking, if you have purchased a 1 crore real estate, then it might or might not be easy for you to liquidate that asset. So please pick your own assets that meet this criteria. So this would be my advice in terms of keeping cash. Am I in cash? Yes, I'm very much in cash. I keep on buying the dip also. I keep on rotating my stocks also. And that is the reason why I sold ITC stock. What was the prime reason for it? The prime reason for it is that ITC right now looks overvalued to me. Now, please do not come tomorrow on the videos if the ITC stock rises and start blaming me that, Akshat, you know what, because of you we sold like ITC stock. I'm not giving you advice to sell it. This is what I have done. If you feel like, you do it. If you don't feel like, please don't do it. But please take responsibility for your own decisions. Now I can make a separate video on the ITC topic altogether. In fact, I was one of the staunch supporters of ITC. You can go and check my previous videos. The entire market was making fun of ITC and I was investing more and more money into it. For me, ITC was a defensive stock. It was a liquid stock which had very little downside. So I invested a ton of money in it. And when the situation got worse and now I'm getting great opportunities to buy several undervalued assets, I sold my ITC and I will rotate that money also into other set of stocks. So now great, we have understood the viewpoint that we should be keeping cash or not keeping cash. Now let's study the second point as to when you should be deploying that cash. So it means that when should you take out that cash and start investing the money. So here there are a few key points that you should remember. So first and foremost viewpoint is that we will not be able to time the market. It is again super funny for me to read comments that Akshat, you recommended like HUL stock a few days back, it has fallen. The entire market has fallen. The entire economies have stopped functioning. Neither me nor anyone else can tell you what is the exact bottom of the market. If that were the case and you tell me you guys are paying to mutual fund managers, they charge 1% to sometimes 2.5% of your entire portfolio amount, whether the market is going up or down. Are they giving returns? The answer is no, they are not giving returns. Similarly, are hedge fund managers giving returns? The answer is no, they are not giving returns. Why is that the case? Because the entire market is falling. You will have days when the market gives massive returns on certain days, and there are days when the market will not move much or rather will fall over a period of 6, 8, 10 months. Can I guarantee what that period will be? No, I can't do it. Similarly, mutual fund managers can't do it. No investor in India can do it. That is an honest viewpoint that I have expressed on several of my videos. So point number one is that no one knows the bottom of the market. Number two, does that mean that you should not try to time the market at all? No, you should definitely try to time the market. And people who say that you should not try to time the market at all, they are not stock investors, they are index fund investors. So there is a difference between the two. Now there are signs that the market is bottoming out. So let me explain this by using the example of Nifty 50 here. So there are two key things that we must remember here. So first key point is that we will not be able to identify this bottom. No one is able to figure out the exact bottom of a falling market. So right now we are sitting somewhere here and it might happen that the stock market falls up till here, or it might go to this point number 2. Anything can happen. So no one can say this for sure. But what we know for sure is this, that we are in this downward curve and this becomes like a buying opportunity. At what rate you should be buying? Should you be investing all your cash right away? Should you not be investing all your cash? Only invest 50%, 25%? That is a specific portfolio related discussion. But many a times you guys ask me that, Akshat, how do you get money to invest in the stock market all the time? Because I'm managing my cash flows. I'm managing my portfolio. I'm selling some of my defensive stocks and profit in a falling market, redirecting it to better buying opportunities. So these are maneuvers that you need to make as individual stock picker. There is nothing off about it, and you as an individual investor investor need to do the same. This is a highly individualistic question that if you're sitting on 100 rupees of cash right now, how much you should be investing right now. The bottom line or the ideal point should be that you should keep on investing for as long as possible. So my hypothesis here is that the markets are going to stay sideways for a substantial period of time. Yes, there can be 5-10% correction anytime. I cannot guarantee it. No one can guarantee it. But I will always be in a situation where I will have 20% of liquid money to invest in that fall. So that is what I am gearing towards. So everyone's situation will be different, but please remember these 2 points that you will not be able to target the bottom. And number 2, as long as you are investing on this falling curve, you will make money. This has happened every single time. It will continue to happen. So another very important pertinent point here would be, and I will explain this via the chart where we started the discussion, that take a look at this part. And this is the reason why people get super excited about timing the market. They feel that if I'm able to avoid bad days in the market, I will make this much amount of return, right? It is like in millions. And of course you would make it, but honestly, no one can time the market. No one will be able to tell you that what those 5-10 bad days in the market would be unless you have some kind of insider information. And as normal retail investors, we will not have that insider information. So what we should be focusing on is this target, not this target. So please keep this point in mind. This is a very, very important point. So now comes the final question that, okay, great. I understand that I should keep certain money in cash. Number 2, I should invest on that falling curve. Number 3, where should I be keeping this money meanwhile? If I have, hypothetically speaking, 1 crore rupee, where should I be keeping it? Should I be investing in ITC type of stocks? Should I be keeping that money in fixed deposit? Should I be investing that money in debt mutual funds? Can you give some clarity around it? Okay. So there are multiple options, but I will speak about 3 most prominent ones. So first and foremost, please do not invest your money in debt mutual funds as of now. It looks dangerous. Why am I saying it? Again, I can make a separate video on that topic, but I will explain you the case of IL&FS. There are a lot of credit rating agencies in India that issue different kinds of ratings. And honestly, to a retail investor, it looks like mumbo jumbo. Sometimes even really good credit rating agencies, they give excellent rating to a particular company and even that company goes bankrupt. So please do not buy a lot of corporate debt as of now. What is primarily happening? And again, please go and watch my previous videos that the amount of money that is circulating in the economy is shrinking. A lot of highly leveraged companies. Leverage means that companies that have already taken a lot of debt, they will have a very hard time in terms of refinancing their debt or paying off their debt. And that is the time where these companies will go bankrupt and that IL&FS type of cases will play out. So no point in investing in dangerous debt giving instruments. What those dangerous debt giving instruments are, please figure it out. I cannot comment more on that. Please use Google a little bit and you will get a list of companies. Number 2, please invest in fixed deposits, but wait a little bit. Fixed deposit rates are going to go up. Please wait for a little while. How much long, I cannot guarantee, but at least wait for a month or couple of months. You should start seeing some jackups in FD rates. So FD will become a very good instrument to hold some of your money. Now comes the third option, which is easy to liquidate commodities. Now, what are easy to liquidate commodities? It again depends from person to person. For example, the commercial properties that I have, can I easily liquidate them? The answer is 100% yes. If I want to sell my commercial properties tomorrow, I can easily do it because they are some of the most prime commercial properties that I have purchased. So there are a lot of buyers that I'm getting. Therefore, it becomes easy to liquidate. Yes, it might happen that it might take me like a few months to recover that entire money. So from a timeline point of view, it might be a little bit off. But for me, that commercial property is easy to liquidate. Similarly, if you are holding some commodities, any form, for example, gold, silver, land, etc., then it might become an easy to liquidate commodities. So these type of easy to liquidate commodities look good to purchase now. Why? Because we are in a recession. This recession is going to last for a little bit. That's point 1. Point 2, the inflation is also going to remain high. And again, I have made so many videos around inflation. Please go and watch it. You will understand the concept of inflation more, and that will give you confidence in terms of maneuvering your money, rejigging your portfolio and creating a little bit of cash so that you can take advantage every time the market falls, and it will keep on going up and down. So I hope you enjoyed the video. If you did, do press the like button. It will help this video reach out to more people. Thank you so much, and I will see you tomorrow.